All right, everybody, what's up? Michael Edward here. As you already know, head trader at True Trading Group. What's up, everybody? Excited to get our little live Q&A session underway. What's up, everybody? Oh, I see we got a lot of the crew in here. Rodrigo, what's up? Jose, Reed, Alex, Jersey Devil, Chai Weezy, Dave, Freedom Traders, my boy. What's up, everybody? Melanie, Svetlana, Pat, what's going on? Kay Thomas, what's up? A lot of familiar faces in here. JJ, what's up? Ziku. A lot of familiar names in here. Thanks for joining me, everybody. So guys, we're gonna. Oh, Michael Frank, what's up, man? Matt, what's going on? So, guys, I think what we'll do, I'm gonna give some people some time to log in. You know, as I usually do, I usually wait a couple of minutes, give some time for people to log in before we really get things underway. Reet, I didn't see you, man. I didn't see you. Reet, what's up? T-Rex, what's up, man? Brett, what's going on? I panic. All right, guys. Yeah. So now that to give people just a little bit more time to log in, I'm gonna take a blanket Q&A session. I'm gonna let you guys ask away, fire away as many questions as you have before we get into the Q&A. While I give people some time to log in, let's talk about today. We'll recap today a little bit. Today was actually a really frustrating day for me. If you guys see the video that I just posted up on the recap for the end of the day, I want to talk to you guys a little bit about kind of what happened and what took place with me today, because today was a very frustrating day for me. And I'm at a point in my trading career where it's not so much the losses that hurt as it is the times that I'm right and I still don't make money. Today, I was right in a TVIX trade. Guys, if you've been following my channel for a while, you know that I love trading the TVIX when it's in play. And we just had a reverse split on the TVIX, and we had a big pullback in the market today. The TVIX had a nice little extension move. So volatility in the TVIX is right now is back. And with the reverse split, that's going to open up a nice trading range for the TVIX again. The TVIX will always tend to go to zero. So it will always reverse split as it gets back, as it slowly starts to go down to zero. We were getting down to like $6-7. So they did the reverse split. And now we're back up in the 60s, $70 range. So I do plan on trading the TVIX a lot, especially if we're going to get a continued pull in the market. I think it's going to give us tremendous opportunity. And if you follow my channel for a while, you know that when the TVIX is in play, I'm all over it. I'm all over it when the TVIX is in play. So coming into the day today, we started to sell off real aggressively in the morning. And while we were selling off aggressively in the morning, I was looking to get long the TVIX for a sell-off into the close in the SPY. The TVIX is the ETF that tracks the VIX. It's the volatility index. For those of you that are not aware what the TVIX is. All right. And I was getting long the TVIX, expecting an afternoon sell-off, and I ended up getting stopped out because the resistance level that I was looking at specifically on the SPY was we were breaking through it, and the SPY was starting to crawl higher. We got above VWAP for the very first time during the day, and it started to climb higher, higher, higher. And I had to manage my risk. I had to stick to my stop loss and exit the trade. Now I exited the trade not with a big loss, but I ended up being right. And then right before the close, the market sold off heavy. And it resulted in like a $3.50 move in the TVIX with a couple thousand shares. That's a big move. And if, this could have been a very different day, but I'm at the point now where I don't mind losing money if I'm wrong. If I'm wrong, I should lose. Right? If I'm wrong, I deserve to lose money. But being right and still not capitalizing, those are the trades that at this point in my career sting. Those are the ones that hurt. Those are the ones that get my blood boiling. Those are the ones that where my emotions start to get out of control. And once I felt that today, immediately shut it down. Once you guys feel those emotions starting to creep up and those emotions take over and they take control in your trading, you've got to shut it down. Because when you trade with emotions, you make mistakes. When you make mistakes, you lose money. So you guys have to be conscious of that, and you have to be self-aware. You have to be self-aware to know when those feelings are coming on. All right. So today's lesson had a lot to do with mental, like we just talked about, and the mental struggles that you deal with as a trader. And this is one of the many lessons that are going to be included by the end of the month. I'm going to be putting out a new trader psychology course on the website for all of our TGG members. This is one of the many lessons that are going to be covered in that trader psychology course. And it really is, I feel like the trader psychology course, and there's a lot of people that are in here that are members in the TGG community, and you guys have been through a lot of the courses already and understand how awesome and how important the lessons and the technical lessons are. But trading is 80% mental. It really, really is. It's the reason why, it's the difference between a successful trader and someone that struggles and ends up failing, because everybody sees the same chart. You and I see the exact same chart during the day. We use the exact same technical indicators. So what makes me successful and somebody else not? And that's because 80% of this is mental. So the trader psychology course that we're going to be coming out with, I put a lot of time into that course, and I'm really excited to get it out to you because it's something that not many people talk about, but it really is a crucial part of being consistently profitable, because we are not computers. We're not machines. We can't make decisions with zero emotions. We can't analyze things with zero emotions. We have bad days. We have good days. Some days you're sick, maybe you have a headache, maybe you're fighting with your spouse, or, your kids, or, whatever it is. Okay. There's aspects of the mental side of trading that are crucial to discuss. And that's why I'm going to be coming out with that trader psychology course real soon. So that's exciting. I'm excited to get it out there, and I hope you guys are excited to check it out as well. Mental capital is more important than financial capital. Financial capital is the money that's actually in your trading account. Mental capital is your mental state of mind and the health of your mindset while you're trading. And that's way more important, because without mental capital, it doesn't matter if you have $1 million in your trading account, it's going to be worthless. All right. So again, guys, that trader psychology course is coming out by the end of the month. So definitely something that you guys want to take advantage of. All right. This is going to be, the lesson that I put up today about that and dealing with that frustration is something that is covered in that course. Yep, exactly, Justin. Some days you're locked in, you're in the matrix. Other days, you can't get your bearings, and you start to struggle a little bit. So guys, we're gonna, I'm just waiting a couple of minutes, letting some people log on. We're getting a lot more people that are starting to pop on here. So I'll just give maybe 2 more minutes or so, and then we'll get into this and we'll start to get started. Danny, the TVIX will always reverse split. The TVIX, if you look at a chart of TVIX, it has reverse split many, many, many times. It's reverse split many times. Yep, guys, I'm gonna, before we get into the questions, I see a lot of people are already typing questions into the chat. I'm gonna wait a couple more minutes before we start the Q&A, because a lot of times when you guys ask a question, a lot of other people may have the same question. So I'm gonna let people come on here. Give some time, and then we'll start taking the Q&A. Yeah, there's options on the VIX. So the TVIX tracks the VIX. That's the volatility index. It's not a direct inverse to the SPY. It's important that you understand that. It's not a direct inverse to the SPY. It measures volatility and fear in the marketplace. Today also, guys, today was frustrating for me also because KOD, if you guys saw KOD today, KOD had some news this morning, gapped up and exploded right out of the gate. Right off the opening bell, we exploded and halted. So KOD, I was looking to get long KOD, and it was a very, very volatile stock today. Had a large spread. You're looking at like $1 to $1.50 spread at some points during the day, and it was my focus there off the morning once it came out of that trading halt. And it was such a high risk trade that I was trying to be real patient with my entry point and my buying zone on the stock so I can manage that risk, because at the time it was a very high risk setup. So if you just market orders yourself in, you're already paying a $1.50 spread. So you're already putting yourself in a major disadvantage. It was very difficult to find a low risk entry point. And I had two situations on KOD where I was looking to get long coming out of the trading halts. And both times I missed my entry by like $1, which in a stock like KOD today, when the spread is $1, $1.50, to miss your fill by $1 is pennies. It's like nothing. So that was really frustrating for me today. So like today really was a frustrating day in general with the TVIX trade and then not getting filled on my KOD trade. So that's why my video today was all about dealing with frustration as a trader. And that's something that, like I said, is going to be covered in the new trader psychology course coming out by the end of the month. All right. So, all right, gang, I think we can start to maybe take a Q&A. Before I get into the Q&A, I want to remind everybody that tomorrow is TTG Tuesday. The chat room is open, free for everyone. All right. If you guys want to come and chat, trade with me live, see my screen, hear me on the mic, go to truetradinggroup.com and then click on where it says TTG Tuesday. You'll fill out the form, register, and you will get provided an access link that'll give you entrance into our chat room for free for the entire day. So if you guys haven't done that yet, make sure you sign up for TTG Tuesday and join me. Also, before we get into the Q&A, the Black Friday / Cyber Monday sale is still live. All right. You guys have until tomorrow at midnight to take advantage of the Black Friday sale. That is 25% off a 1-year all-inclusive membership plan that includes the chat room, the text message trade alerts, the swing trade alerts, the beginner trading course, the advanced trading course, the options trading course, as well as all future courses coming down the road, including the trader psychology course that I was just talking to you guys about. That is still active. If you guys still want to take advantage of that deal, you can use coupon code TTGBF19. Okay, TTGBF19. Like I said, guys, that gets you everything. Okay, that gets you all of the education, all the trading courses, as well as all the future courses that are coming down the road. All right, so again, guys, T here, I'll type it actually. There it is. There's the coupon code, guys, if you're interested in the Black Friday sale. Like I said, you have until tomorrow at midnight. What is a TGD session like? Gregory, a TGD Tuesday session is just like any other day in chat, but we open up the chat room free for anyone that wants to come in and trade with us on the day. So you get to see what it's like for to be a member in the chat. So you see my screen, you hear me on the mic. We're talking through our trades. We're talking through the analysis and letting everybody know what we're doing and what we're seeing. There's a link, guys, for you to, if you want to register for TG Tuesday for tomorrow, you can click on that link right there that we just posted in chat. Yep, Rudy, there's the link right there, right above. All right, there it is, guys. There's the link for TGD Tuesday for tomorrow. Guys, also, and then all right, so we're going to get started here with the live Q&A. Before we do, the Black Friday sale includes a 30-minute one-on-one with me. That's only for today. That's only for tonight. That expires tonight. So by tomorrow, you still get the 25% off, but tonight, 25% off and a one-on-one session with me, that expires tonight. So that's the TTG BF19 discount code. So again, guys, if you're looking to take advantage of the Black Friday sale and get the free one-on-one, that's TTG BF19. All right. All right, guys, I think we are ready to dive into our Q&A. So what I'm going to do here now, yeah, perfect. There we go. All right, guys, so there's the link that'll take you to the website so you can take advantage of the Black Friday sale, get the 25% off and the free one-on-one with the coupon code TTGBF19. Again, that's all of the educational courses and all the courses that are coming out down the road, including the trader psychology course that we talked about in the beginning of this video. All right, so let's start our Q&A session here. I'm going to bear with me, guys, because I got a lot of questions that need to be answered. I see a lot of you have been typing questions away. I'm just going to start to pick them as we go. Chai Weezy asks, Mike, how often do you go over your max loss and what percentage of your trades are full size and not tier one? That's a really good question. How often do I go over my max loss? I don't really have a max loss, Chai. Just at this point in my career, there have been times when, I can be down big and then work my way back. I determine my max loss not on dollar amount, but rather mental, because I trust myself enough to, even if I take a huge loss, as long as I'm still mentally in the game and I'm not completely, I'm not upset, I'm not, my blood's not boiling and I can still think with a clear mind, I keep myself in the game and I try to just chip away at that loss, and I try to make the loss a little bit more manageable on the day. So I don't necessarily personally have a max loss dollar wise. Now listen, if something happens out of the ordinary and I just get absolutely smoked on something, that maybe I get caught in a huge piece of news during the day. If I really get crushed on something, then I'll just walk away, because I'll be upset. It kind of goes hand in hand to be upset and take a big loss. But, as long as I'm still there mentally, I keep myself in the game. What percentage of your trades are full size and not tier one? I'd say the majority of my trades are full size. Tier one, it really depends on the setup. There are certain setups where tier one makes the most sense. For those of you that are unfamiliar, this is something that is covered. This is the tier trading strategy that Chai Weezy is talking about. The tier trading strategy is something that I implement in my trading and I teach all of our teaching members. It's a strategy that I learned when I worked at the hedge fund, because when you guys are trying to get into very large positions, multi-million-dollar positions at the hedge fund, you can't get in and out of them in one trade. You have to scale your way in and scale your way out. You can't exit, up $2 million of a stock in one keystroke. You'll move the market too much and you'll create inefficiencies in your order fill, and you're just going to hurt yourself. So you got to tier in and tier out. That's where I learned the tier trading strategy. I have since tweaked that so it relates to my personal retail trading, and that's the tier trading strategy that we use. Tier one is designed to be a feeler. It's supposed to be a test, right? Like it's when you think you see something, but you're just not sure yet. And that tier one is 25% of your desired size. So let's say you're looking at a stock, you think you see a bull flag, you want to buy 1,000 shares. You're not quite sure it's a bull flag yet, but you think it's there. You're going to buy 250 shares. That's 25% of your desired size. Then once something happens that confirms your original thought, So you thought you saw a bull flag. Now you get confirmation it is indeed a bull flag. Then you're going to add tier 2 up to your full size position, and you're going to catch the move. The idea is that by entering tier 1, you reduce your risk in case you're wrong. And if you're wrong, you're only wrong on 25% of your position. And then when you add tier 2, the percentage probability of you being right should have increased because something else happened. You got some new piece of information that confirms your original thought process. And when you confirm your original thought process, that is when you add up to your full size position. Tyrex, really good question. Mike, Tyrex asked, Mike, when you started out trading, how many setups did you play around with and track before you found a couple consistently profitable setups like your TTG triangle? I'd say 5 or 6 is kind of where I kind of found like my sweet spot, Tyrex, when I was looking at specific patterns. I started out with very basic patterns like a bull flag, a double bottom, a head and shoulders, like very basic chart patterns that everybody, when you first start to learn how to trade, these are chart patterns that are kind of the first things that you will learn. And these are all chart patterns that are covered in all of the courses that are available on the website for members. But then as I started to develop as a trader, I started to be able to identify some more complex strategies and some more complex setups like a TTG triangle, like a double bottom gap up. And these are patterns that I've covered with you on the YouTube channel, that I cover in all of the online courses, that you're not going to find on a simple Google search, or you're not going to find on another trader's YouTube channel, because these are patterns and setups that I have really, not to say that they're not secret, they're not special, but they're just patterns that I have learned to that really need a specific set of criteria. And when that criteria is met, the probability of those patterns increases a lot more than a traditional bull flag or a traditional head and shoulders pattern. And that's why you guys see me go after the TTG triangle. That's why you see me. And the TTG triangle, it's a variation of the ABCD pattern, but it's just a very specific ABCD pattern when very specific criteria are met. And that's kind of where my trading evolved a little bit, Tyrex. When I started to take basic chart patterns like a typical bull flag, and I started to recognize, intricacies within those patterns that make it a little bit more specific, and certain variations of those patterns that I started to realize, have better probability. All right. M Vlogs, no, I did not trade ASLN today. Tarjay T, great question. And Pat, great question. I'm gonna take, these are gonna be my next 2 questions. Pat asks, how do you identify false breakouts? I'll cover that in a moment. Tarjay asked, how do you find option strike prices to trade when you're day trading? There's so many to choose from. Excellent question, and it's something that a lot of traders struggle with. All right, something that a lot of traders struggle with is selecting the right option to trade. This is an entire section in the options course that's on our website that talks about selecting the right option contract for you to trade. All right, all of this is covered in the options course. When you are looking for your strike price, the first thing that you have to do, Tarjay, and I hope I'm pronouncing your name right. The first thing you have to do is identify the predicted move that you anticipate in the underlying stock itself. So if you're looking at, let's say, a put option on Roku, you're trying to determine your strike price, you first have to figure out where do you think Roku is going to, and how long do you think that's going to happen. So now if you're talking about day trading options, you're looking at, you expect it to happen today, right now. That's first and foremost. If you're looking at day trade the option, you need to focus on where's the stock going to go today, not tomorrow, today. Your contract will expire at the close. They'll be worth 0 if they're out of the money. All right, so that's the first thing that you need to do. The second thing that you need to do is then take a look at the strike prices that are near your target. What I do, let's say I think Roku is going to go to $130 and it's currently trading at 135. What I'm going to do is I'm going to look at, let's say, the 135 strike, the 132 strike, and the 130 strike. If I think the stock's going to 130, I'm going to take a look at the volume on those contracts. I'm not looking at the open interest. If you're day trading at Target, I'm looking at the volume on the day. All right, I'm looking at the volume on the day, and I'm going to see which contracts have the most volume, because I want to make sure that I can get in and out of my position quickly. Because if you're looking about day trading an option contract, it's going to move very, very volatile because you're going to be trading the closest expiration. And the option contract with the nearest expiration date will have the most volatility. So what I'll do is I'll look at the 135, the 132, the 130. I'll see which one has the most volume. Now, let's say the 130 and the 132 have very similar volume. Now what you're going to do is determine how much risk do you want to take on this trade. Because the further out you go, Tarjay, the greater the risk you're going to have on the trade. So if you buy, well, Roku's at 135. If you buy the 130 strike and I buy the 132 strike and Roku doesn't go down, it goes up, you're going to lose more money than I am. The 130 strike will go down in value quicker and more than the 132. Now, on the flip side, let's say you're right and Roku really does go down to 130 and it goes to 129, 128. You're going to make more money than I am by buying the 130s and me buying the 132s. So the farther you go in your strike price out of the money, the more risk you're taking on the trade, but also the more potential reward you're taking on the trade. So what I like to do is determine how close is my entry to my stop loss. When you're looking at the underlying stock, you're looking at Roku and you're saying Roku's trading at 135. I think it's going to 130. If it gets above 136.50, I'm going to stop out of the position. It means the trade's not going to trigger. Depending on how far away my stop loss is on the underlying stock will dictate how aggressive I want to get with my option. If I can get into a contract, Tarjay, where I'm very close to my stop loss, in that situation, I might go for the 130s and take the extra risk because I have a real tight stop loss. If the stock's at 135 and let's say I'm stopping out at 136, then I might go for the 130 strike price. But let's say Roku's at 135 and my stop loss isn't until 138.50. In that situation, I might look to go after the 132 strikes or maybe even the 135 strikes because I want to reduce my risk. That would be way too much risk. You'd be looking at a 60, 75% loss if you go after the 130s and Roku goes to 138, maybe even an 80, 90% loss. So the further out you go, the more risk you're taking. So depending on how close you are to the stop loss on the underlying stock will dictate how aggressive I want to get with my entry. Tarjay, I really hope that answers your question. I know it sounds a little bit more advanced and technical, but again, guys, this is stuff that is covered in the options course that's available on the website. If you guys want all the courses, I'm telling you, take advantage of this Black Friday sale. Use the coupon code TTGBF19. You get the entire curriculum on the website, as well as all future courses coming down the road. And for those that sign up tonight, you get a one-on-one session with myself. Again, that's TTGBF19. Next question I'm taking is from Pat, who says, how do you identify false breakouts? Pat, one word: volume. Every single time a stock breaks through a level of resistance, you want to see an increase in volume. Every single time. When a stock breaks through the high of the day, you want to see an increase in volume. The key to not getting caught in false breakouts, I'm going to talk to you about two different things, and they kind of play off of one another. A stock, in order for a stock to have follow through and continuation, it needs strong volume. Not just an increase in volume, strong volume. What's the difference? Strong volume is consistent. An increase in volume is just that, an increase. But then volume can dry back up. A lot of times in false breakouts, what you'll see happen, Pat, is a stock will break through resistance with heavy volume, and all of a sudden the volume dries up. The stock pulls back in. When you have a stock that breaks through a level of resistance, and you see an increase in volume, you want to see those volume bars steady, 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 steady. That's how you know you're going to get follow through and you're going to get continuation. Something that I realized in my trading a long time ago by going over and reviewing all of my trades was I set a rule for myself. If you follow the channel for a while, you know this rule. And that is that I do not chase lunchtime breakouts. Why? Lunchtime breakouts tend to fail more often than not. Why? Volume is typically lighter during lunchtime. And now that you now know, we just discussed, in order for a stock to have real continuation and follow through, you need what? Strong, consistent volume. That's why lunchtime breakouts tend to fail. They're not going to fail every time. Sometimes you get a stock breaks a high day at 12:30, 1 o'clock, and it continues. But majority of the time, a lunchtime breakout is going to tend to fail more often than it's going to give you follow through. I started to go back in my trading and my journal and realize that some of my biggest losses were coming during the hours of 12 and 2. And I wasn't quite sure why, but that's something that I noticed. And I said, you know what, screw it. This is years ago. I said, screw it. I'm just not going to trade between 12 and 2. I'm just not going to do it. I did it. The very next month, my P&L saw a bump. My P&L saw a bump the very next month. And that is how I implemented the rule. I will not chase lunchtime breakouts. You guys will hardly ever see me enter a brand new position during lunchtime. You'll see me take profits during lunch. You might see me add to a position during lunch, but you'll never see me enter a brand new position during lunchtime. And that's the reason why, because you tend to get a lot of failed breakouts tend to happen during lunchtime. They're actually really, really good short setups. For those traders that are in here that like to short the small caps and the low float stocks and you can get borrows on them, look for those stocks that are real hot and heavy in the morning. All traders have their attention on it. Stock's up 100% or whatever it is. And it breaks a high of the day at like 12:30, 12:45, 1 o'clock. And then you don't get that volume consistency and the stock pulls back in. That is your short entry. Stop loss, high of the day. And you look for an afternoon rollover. It's a very high percentage pattern, a very high percentage setup. And for those of you that like to short the small caps, look for that setup going forward. Okay. JJ asks, Mike, did you ever scalp the open, or have you always been a more after 10 a.m. trend trader, trying to get better at holding trends, and that's why I joined TTG? Any tips? Well, JJ, as you already know, I'm not a scalper. Okay, scalpers are traders that get in and out of stocks within seconds to minutes. That's not me. That's not my style. I'm more of a typical day trader that tries to hold on for a bigger chunk of the move. And I also do swing trade as well, but I'm more of a traditional day trader rather than a scalper. I'm not a momentum scalper. I don't get in and out within 10 seconds. My trades last several minutes to a few hours. That's my typical trade during the day. So I never scalp. So to answer your question, like, did you ever scalp the open? I never scalp, but I have traded at the open in the past. And I just started to realize that, especially in small caps, I was getting hurt right at the bell. And the reason why I was getting hurt right at the bell is because you don't have enough information at the opening bell to determine if a stock is strong or weak. You just don't. You are chasing momentum at the opening bell. And that's why you'll never see me place a trade within the first 3 minutes of the day. You just won't see me do it, because all of that price action is just pre-market order flow and traders that are just chasing momentum. They're chasing a gap up. You don't know if the stock's really strong or really weak. That's why a lot of times you can have a small cap that looks so good pre-market. It gaps up. Everybody gets excited. The bell rings. It opens at like $3.50. Within 40 seconds, it's at $4. And then by the 45th second, it's at $3.20. And you get caught buying $3.90 and then stopping out at $3.25. You put yourself in a massive hole so early in the day that it screws you up for the entire rest of the trading day. You don't want to put yourself in positions where you do not have the advantage. At the opening bell, you do not have the advantage. You are at a disadvantage at the open because there's no pattern, there's no setup, you're chasing momentum, and you cannot identify your stop loss. Every time you guys enter a trade, you must know where your stop loss is. You need to know two things when you enter a trade. Where's your stop loss? Where's your take profit? If you do not know the answer to those two things, you cannot pull the trigger. And at the opening bell, it's very difficult for you to say, there's my stop loss, because you don't really know. The only thing you have to go off of is like a pre-market low, which is a weak level to begin with. It's a pre-market level. It's a fraction of the trading volume. That level can get blown through in a second. So it's very difficult for you to identify your risk and your stop loss right at the bell. And that's why you guys don't see me ever chase a stock at the bell. And I don't care if a stock gaps up, opens, and goes from $5 to $50 in the first 2 minutes of the day. I'm not going to trade it. I'm not going to trade it. Now, will that cause me to miss some opening bell runs? Yeah, sure, it will. But is it going to save my ass from getting excited on the stock that gaps up? It was at $2 yesterday. It gaps up to $6 today. The bell rings. It runs to 650. Everybody gets excited and buys 650, and then within the blink of an eye, it's at 550. That'll never happen. All right, that'll never happen. I like to wait for setups. I like to wait for patterns. As you guys know, listen, there's a lot of members that are in here in chat. You guys know some recent examples. ASLN, huge monster win. Stock ran like 500%. We caught it. Huge win in chat. You guys might remember PTI. PTI, huge win. 74% gain on PTI. That's what we pulled out of PTI in chat. Members in here, you guys were there. A lot of you capitalized on it. A lot of you made money on it. These are the trade setups that members are seeing in chat. These are the trade alerts that members are seeing in chat. And like to get the trade alerts, like I said, guys, the Black Friday sale, TTG BF19, 25% off all the trade alerts, all the educational courses, and the one-on-one mentor session with me. All right. But those are two examples of two stocks that gapped up huge at the open. I didn't chase them. I waited for setups, and I attacked when a setup presented itself, when I can clearly identify my risk, and I caught monster wins. That's why I do not scalp right at the opening bell. So I hope that answers your question, JJ. REIT Best. REIT Best is completely new to share market. So can I buy and sell shares without any broker, only through apps in phone or not? Well, no, you need to have some type of a platform. So if you want, you can use Robinhood. But you need a broker. You can't trade stock without a broker. You need either Robinhood, E-Trade, Charles Schwab, TD Ameritrade, or one of the others. Oh, McCall, nice. Yep, that was on Tuesday. Yeah, you were there that day. I remember that. What do you have for a small account under the PDT rule? Javon, good question. Okay, so guys, for traders that are under PDT, listen, I've never been held under PDT rule, but I know it is something that a lot of traders struggle with, or a lot of traders try to find ways around. McCall, I know, man. Yeah, guys, all right, so the PTI trade, just real quick, McCall is now a member of TTG, but he was in TTG Tuesday when I made the PTI trade. And like, again, guys, TTG Tuesday, it's open free for everybody. It's tomorrow. So if you want to join me in chat and see my screen, hear me on the mic live going through all my trades, go to truetradinggroup.com and then click on register for TTG Tuesday. Fill out the form. You'll get a link that'll give you access to our chat room. That's what McCall's talking about TTG Tuesday. Where was I? Oh, for PDT Roll. All right, guys, real quick, two things. Two things you need to know about PDT Roll. It's one round trip counts as a day trade, meaning if you buy 1,000 shares of a stock and then you sell 250, you sell 500, you sell 250, that counts as one day trade. All right. But now if you buy, let's say 500 shares and then you buy another 500 shares and then you sell 250, 500, 250, that counts as 2-day trades. All right. So that's one thing that you guys need to know. The tier trading strategy that I teach that's available on the courses is designed to help keep your losing trades small, but also keep you in winning trades longer. So I tier out of my winning trades. You guys always see when I'm in a winning trade and the stock starts to work in my favor, I go up to, I sell 25% of my position. Then as the stock extends and continues, I sell 50% of my position. And then I hold on to one last 25% in case I get real follow through and real continuation. And that keeps you in winning trades longer by tiering out of the position. When you're held under PDT rule, understand you can still tier out of your position. All right. Like I said, if you buy 1,000 shares, you can sell 250, 500, 250, and that only count as one day trade. So that's something that you need to know if you're under PDT rule. The other thing you need to know is that if you use a cash account, you won't be held under PDT, but you'll be held to T+3 for the cash to settle, and you can only trade with the cash that's in your account. So you can't use margin, but you can trade with the cash that's available in your account. Also, guys, listen, I didn't tell you this, but you can open up more than one account. Open up an account at E-Trade, open up an account at TD, split your funds up. If you have 10 grand, put 5 in one, 5 in another. That's another way, but you didn't hear that from me. I didn't say that. So those are just some little tips for people that are held under PDT rule. All right, let's go. Continuing on. I'm just scrolling through some of the questions, guys. I'm just going to pick one. Brian asks, do I think December 2018 sell-offs could happen again this year? Also, do you also trade earnings? Brian, no, I don't think December 2018 sell-offs could happen again because the 2018 sell-offs were strictly because of monetary policy and monetary tightening from the Fed. And that is a much larger macroeconomic catalyst that would hurt markets. And we now know that we're going to have low interest rates for the foreseeable future. So that monetary policy risk is not there today like it was in Q4 of last year. The global macro catalyst that we have now is centered around trade. But the only way I think we get a December 2018 type sell-off is if China completely walks away from the table. If Trump increases tariffs December 15th, we will see a pullback. The market will sell off. Do I think it will be as aggressive as December of 2018? No. Maybe it will if he increases tariffs and China walks away. Then I think you can get that type of a sell-off, Brian, like we saw last year, but I don't think that's going to happen. I'm not positioned for it. Also, do I trade earnings? No. So this goes back to advantage and disadvantage. I like to trade and put myself in an advantage. I like to put myself in high percentage probability setups. Earnings is a complete coin flip. I have absolutely no idea if a stock is going to beat or miss its earnings. I have no idea if a stock is going to raise guidance or lower guidance. So I don't enter positions purposely going into earnings. One of the rules I actually tell all of our TGG members is when you are swing trading, make sure you know the earnings schedule of the stock you're swing trading, because you do not want to get caught in an earnings gap in the opposite direction of your trade. So I don't like placing coin flip trades. I like placing trades where I think that the odds of the trade working out in this direction is a lot greater than 50%. And I try to use my analysis, my technical analysis, my indicators, my chart pattern, my risk management to get that percentage up into the 70s on the probability of a stock doing one thing versus the other. By having a position going into earnings as an active trader is very risky because you don't have that advantage. Now, if you're a longer term swing trader and you're actually trying to take advantage of that earnings gap, that's a different story, but that's just not my style. It's not my strategy. Searching observer, how do taxes work? Nope, you're only going to pay your capital gain on the year. So whatever amount of money that you made trading on the year is the money that you're going to pay taxes on. You'll pay a short-term capital gains tax on any income that you generate trading during the year. Any asset that you hold more than 1 year will be subject to a long-term capital gain, which is a lower percentage based on your tax bracket compared to short-term capital gains. Lunchbox asks, do you ever buy back in or add to your position if it starts to rip? Absolutely. So we've got tier 3. So remember I was talking about the tier trading strategy. So there is a tier 3. So tier 1 is 25%. Tier 2 gets you to your full size. And then tier 3 is icing on the cake. So tier 1 is the position you enter when you think you see something, you're not really sure, you want to test the waters, you want to try it out, you enter 25% of your desired size. Then something happens that gives you confirmation that what you thought you saw, the reason why you entered tier 1 is confirmed. That's when you add to your position, you get up to your full size. Then tier 3 is an extra 25% of your desired size when all the stars align. When everything is going exactly the way that you planned, all the stars are aligning, it's the picture perfect trade, all of the criteria are being met, you're super confident on the trade, you're going to add to a tier 3, and that's another 25%, and that's just icing on the cake. Okay, scrolling down. Mike, you never trade. Chai Weezy asks, Mike, you never trade pre-market or after hours. Why not? And why do other people? I'm scarred. Chai, I'm scarred. I used to trade after hours earnings prints. Maybe this has a lot to do with why I don't trade earnings. I used to trade them when I was the hedge fund. And I just got beat up on them. I used to trade large cap earnings, and there were so many times when, like, right off the earnings print, the stock would collapse, and then all of a sudden it would just rip back, or the other way around. And I found myself just getting like really wrapped around in that type of action. And I just kind of told myself I was going to stop doing it. And, you know, it's not that I'm against trading pre-market or after hours. It just, the volume has to be there. You know, I don't like trading a stock when it's just a fraction of the volume. Sometimes on these pre-market news related stocks, the volume's there and you can trade it pre-market, and you can. It's just not something that I like to wait for the bell. I like to wait for the real volume, and really, you know, get a good feel for if a stock's truly strong or truly weak. There's a lot of times that pre-market doesn't really give you the full picture. Well, Jay, they're hard to get a borrow on. You know, they're hard to get a borrow on. I mean, I short stocks that I can get borrows on, but with Lightspeed and then E-Trade Pro, a lot of times you can't get a borrow on some of these low float small cap stocks. You need like one of those boutique firms, or like Centerpoint is really good with borrows. I know Interactive Brokers sometimes can get you some borrows. Ooh, biggest lesson learned at the hedge fund. That's an easy one. It's not necessarily one lesson, Zion. It's really the importance of your mental state of mind and the importance of keeping your emotions under control. I told this story. I think it was our last live stream. I told this story, and I'll tell it again now. I was in a position at the hedge fund one time, and news came out, and I was on the wrong side of the trade, and I got absolutely crushed. I stood up, I picked up my keyboard, I snapped it right in half, like a bunch of keys from the keyboard went flying. I had to scream to the IT guy to bring me a new keyboard, and my senior portfolio manager kicked me off the trading floor. I just went into the little lounge for the rest of the day and just kind of cleared my head. And then he came into the lounge to talk to me, and then he called me into his office after the bell and sat me down, and he sat me down and really took me under his wing to help me understand the importance of keeping a level head. And he was telling me, the potential that he sees in me. But I was a nutcase. When I was a young trader, I was a mental nutcase. I never had a problem with big wins, but I also had very big losses. And most of the time it was because of this. When I was I was very arrogant when I was younger. When I was a young trader, I refused to admit that I was wrong sometimes, and I got myself into some trouble. And what I learned, the biggest lesson that I learned was that, losing is part of trading. And I learned that I have to be able to keep my emotions under control when I take a loss, and I need to focus more so on risk management than I do need to focus on how much am I going to make when I'm right. And I always say, and I tell our TGD members, I tell them that the difference between a great trader and a struggling trader is that a great trader always focuses on how much they're going to lose if they're wrong, and a struggling trader always infatuates with how much they're going to make if they're right. And that's one of the biggest things that I learned while working at the hedge fund is risk management and keeping a level head and keeping my emotions under control. Because when your emotions are not under control, it's impossible to have good risk management. This all goes back to, again, guys, the trader psychology course that is going to be coming out by the end of the month. The trader psychology course is going to cover all of this stuff. All right. All of this is going to be covered. I'm telling you guys, like 80% of trading is mental. 80% of trading is mental. If you guys want access to the trader psychology course when it comes out, you've got to take advantage of the Black Friday sale. You get all the current courses and all the courses coming down the road. All future courses are included in the membership. So take advantage of this, guys. You get 25% off all the courses, all the future courses, TTG BF19. Use that coupon code at checkout to take advantage of the Black Friday sale. It's all included, guys. We literally are the Netflix of trading communities. There are no upsells. You sign up, you become a member. That's it. You get every single thing that we have to offer. There's no upsells for this package and that package and this course and that course. No, you get the whole thing. You know what, Jay? You may be surprised, but I don't really read books. I don't really read books. So I really can't make any book recommendations because I really haven't read any. Mike, how do we scale up? Prove, say, $100 per day on average for a month, then go to 150 and so forth? No, you need a lot more than 1 month, Chai. You need a lot more than 1 month. 1 month is not enough for you to scale up. I want to see consistency for at least 3 months before you start to increase your position size. And really, increasing your position size is not necessarily something that is 100% based on P&L, because you have to increase position size when you are ready for it. Just because you're hot and you're having a string of winners, just because you're just because you just because you're on a roll and you're having a string of winners doesn't mean that you're ready to increase your position size, because you can be trading really well for 2 or 3 months. Okay. You can be trading well for 2 or 3 months and then go and increase your position size, and you're not ready for it mentally. And all of a sudden your heart is pounding out of your chest. It's literally pumping out of your chest when you're in the position. That means you're not ready for it. You're sweating, your legs are shaking. It's just, that means you're not ready to increase your size. All right. So increasing your size needs to be done in increments. You need to scale up your position slowly. Let's say your average position size is $5,000. When it comes time for you to scale up, your average position size can't be 10,000. You can't double your position size. All right. So you've got to do it slowly and steadily. And like I said, when you increase your position size, you have to feel exactly the same. If you feel any other sense of anxiety, if you literally feel your heart pounding out of your chest, that means you're not ready to increase your size. And I would suggest that you scale back your position size back to your regular amount, so that you're not, to get rid of that emotion and get rid of that anxiety. Several 6 figures. The Giants. You should paper trade as long as you need. Honestly, Jay Cruz, you should paper trade as long as you need, because paper trading is something I recommend that all traders do at the very beginning before they start trading with real money. Because while you're learning, it's important that you learn with fake money. And I make the analogy with poker a lot. And it's, if I said to you, hey, I want to learn how to play poker, but I don't know how. All right. I don't know how, but I'm going to learn. And the first thing I'm going to do is I'm going to go enter the World Series of Poker. I'm going to spend $10,000 to enter the tournament, and I'm going to go sit down and play poker with the best players in the world. And that's how I'm going to learn. Well, guess what? Those players are going to take your money like that. The stock market's no different. When you guys sit down at your desk and you start to place a trade, you're competing against some of the fastest, most intelligent, smartest, experienced traders and computers in the world. If you don't know what you're doing, they're going to take your money like that. You're competing against me. You're competing against every person that's in this chat. You would never do that in poker. So why would you do that now? Why would you open up a trading account and just start trading with real money and say, I'm just going to figure it out as I go? In the meantime, you're going to lose your money while you try to figure out trial and error. So I suggest everyone paper trades for several months. So what I recommend that all of our TGG members do, people that sign up to TGG have never traded a day in their lives, I say, don't even think about trading yet. Open up a paper trade account. Okay. Open up a paper trade account. That's first and foremost. Then what you're going to do is you're going to start with the beginner and foundation courses that get you started and sets all the groundwork and gives you that foundation to become a consistently profitable trader, and sets the rules and discipline and foundation of the strategies. Once you're done with that, you then move on to the advanced courses. You go through the advanced courses, you learn all the more technical stuff, things that I really use technical analysis wise, chart pattern indicators, some hedge fund tricks and that type of stuff. That's in the advanced courses. Once you complete that, then I say continue to paper trade. And once you show yourself a level of consistency with paper trading, then it's time. Then you can go into and open up a real account. So first things first, learn, get the education. Then after you get the education, show some consistency for a couple months with a paper trade account, and then switch over and then open up your live account. So guys, we're about to hit the 1 hour mark on our Q&A session. I hope you guys are enjoying the Q&A. I hope you guys enjoy all the education, all the material that I put out and I share with you. I truly want to do everything that I can to help you guys become consistently profitable traders. I really, really do. I care about each and every one of your successes. You know, I'm going to go here for about another 15 or 20 minutes. I'm going to answer a couple more questions, but you know, guys, if you appreciate everything that I'm sharing with you, make sure to like this video and support TTG, support the group. The stuff that I share with you on these videos is a fraction of the education that is covered in the courses and that's covered in chat. There's a lot of members, there's a lot of TTG members that are in this chat right now. That, guys, do me a favor, all the members out there, comment in the chat, you know, let everybody know what your experience is like at True Trading Group. Let everybody know, you know, if True Trading Group and the education that you've received has helped you become a better and more profitable trader. I want to hear from all the TTG members. There's a few of them that are in here right now, tuning into this live Q&A. Can we call in? I don't have a dial in. No, we can't call in. So yeah, guys. So like I said, take advantage of the Black Friday sale and really, you know, I try to go through as many. I mean, there's so many of your questions that I did not get to answer, and I'm going to answer a couple more. There's so many of your questions I did not get to, and I try to answer as many as I can. I really do, you know, I really do try my best to help you guys out, but there's only so much that I can do on these videos and on these live streams, Q&A sessions. You guys really want the full gamut. The courses are where it's at, and any TTG member that's in here right now can attest to that. So, all right, guys, I'm going to keep this going here for another. I'm going to keep this going here for another 15 minutes or so, 20 minutes. So shoot away, guys. Keep ask a couple more questions, and before we wrap things up for the day. Bet paper trading is trading with fake money. So there's a lot of these brokerage accounts. They offer paper trade accounts, which is just a simulator. So you're trading, you're making trades, but you're not using real money. It's a good way for you to practice before you start trading with real money. The Giants, you're asking me real personal questions that I do not like to share. Tape reading is, I mean, listen, tape reading is important. I think tape reading is more important for, I think it's more important for really feeling the heartbeat of a stock than it is to cause you to pull the trigger or not. You know, I mean, tape reading is something that I use, and it's something that you develop over time and that you'll develop, you know, with experience to be able to feel the heartbeat of a stock. Okay, that is really what I find tape reading to be the most useful, is to help you feel when a stock has momentum in it. And that is when I think it's important to start to read the tape. It's not something that I base my trades on. It's not like I'm going to see something on the level 2. I'm going to see something in the tape that is going to cause me to pull the trigger. There's got to be a lot of other reasons why I'm going to be pulling the trigger. Reading the tape just kind of helps me gauge the momentum of the stock. Fausto, my man. Thanks, Fausto. Yeah, my win rate is right around 72 to 73% over the course of the year. Nice, Chad. Chad, I'm glad to have you here, man. Thank you for those kind words. No, it's not that I lean towards small caps. Not that small caps are my preference. I trade everything, guys. I trade small caps. I trade mid caps. I trade large caps. I trade options. I trade everything. It just so happens that when small caps are hot, like they have been for the last week or so, I trade them because that's where I follow the opportunity. But when small caps are dead, I'm not trading small caps. You know, when TVIX is in play, I'm trading that. When Roku, when Beyond Meat was in play, all I was doing was trading Beyond Meat when Beyond Meat was in play. I traded that thing like every day for like 5 or 6 days straight. So, you know, it's not that I prefer small caps. It just, if you just started coming into chat, maybe it's just because small caps are hot right now. But it's not that I prefer small caps over something else. I really just follow the opportunity. And if small caps are hot, I'll trade them. If not, I'll trade something else. The Giants, that's awesome. 83% is very high. Nice. Yeah, nice, Rodrigo. Mike asks, I notice you trade JNUG. Is that your go-to stock when the market's generally slow? No. I like trading JNUG when gold is in play. And for the last couple of months, gold has been in play. But, you know, prior to the last couple of months, I have not touched JNUG. Like, if I went to, let me pull up a chart. Prior to, I would say the summer, like I was trading JNUG a lot, like July and August. July, August, September, I traded JNUG a lot. I haven't traded it as much lately. I made a one trade on it, a nice one. It was a swing trade in October. Actually, that was a really nice swing trade in JNUG. But other than that, I haven't touched it in a while. Again, guys, this all goes back to, I don't have like one go-to stock. I follow where the opportunity is. You know, I follow the opportunity. And whether that's in small caps, mid caps, large caps, or options, I follow the money. You know, I follow the flow. I follow the opportunity. My biggest loss, J. Cruz, was $92,000. That was my biggest loss. Oh, Ali. Okay, so Ali, are you referring to, how do you know when it's time for you to trade full time and like quit your job? Is that what you're asking? All right. So you really have to show long-term consistency, Ali. A lot of people, the biggest mistake that I think a lot of traders make is that they go full time before they're ready. And once you go full time, it's scary. You know, it's honestly, Ali, I would say, you know, probably a year. I would say, like, prove to yourself that you can be profitable for a year before you say to yourself that it's time for you to before it's time for you to, you know, quit your job. You really have to make sure that you're profitable in multiple market environments. So if you want to make sure you're profitable in a bear market, in a bull market, you know, when small caps are hot, when small caps are cold. What you don't want to do is get involved is start trading, and, you know, small caps are hot for 3 months, and, you know, you're crushing the small caps for 3 months. You quit your job, you start trading full time, and all of a sudden small caps are dead and you can't figure out how to make money somewhere else. So that is what you have to make sure that you stay away from. You guys are killing me with these questions. My biggest win at the hedge fund, or like just me personally in my life? Win for 3 weeks, then lose it all and learn. Fausto, you can't do that, man. You can't do that. You can't do that, Fausto. That kills me to hear that, man. You've got to be able to manage your risk. You guys work so hard. You guys work so hard to make money while you're trading to just give it all away like that. Individually was 150. Okay, good, Fausto. Good. All right, so yeah, good. So now you're scaling into positions and going smaller, picking my spots more. Good. Yeah, Wall Street Wolf. Good. Hey, Wall Street Wolf. Good to see you, man. Thanks for joining us. Adele, the things that are a must not forget for trading are, I mean, there's so many. I'll just give you a couple. Yeah, all right. Yeah, a book that I would recommend is the Reminiscence of a Stock Operator is a good one. Derek, I mean, I would say at least $500 is probably the smallest. If you can start with a couple $1,000, I would suggest that. But I think like $500 is the smallest amount to open an account. Rhonda, good question. Rhonda, I want you to do me a favor. If you struggle, and this is for everyone. Rhonda's question is, how long should you stay in a runner? I get bubble guts and usually get out too early. There's two things I'm going to go over with you that'll help you stay in a winning trade longer. The first is the tier trading strategy, which I explained to you earlier, which is when a stock works out in your favor, you sell 25% of your position. As it extends, you sell 50%, and then you hold 25% in case you get real follow through and real extension. The other thing I want you to do is remove your P&L from your trading screen. Remove your P&L from view. I can't see my P&L during the day. That'll prevent you from trading your P&L and focus on trading what's in front of you. A lot of times what traders do is they trade their P&L. What do I mean by that? Let's say your biggest win you ever had was $500 and you're in a trade and you're up $600. And then all of a sudden the stock moves a little bit and now you're up $525. What are you going to do? You're going to sell your position. Why? Because it's the biggest win you've ever had and you're focused on trading your P&L. Meanwhile, every single thing on that chart could be telling you the stock's going higher. So why are you selling it? You're selling it because you're trading your P&L, not the stock in front of you. Trade the chart, not your P&L. So if you are one of those people that struggle with jumping out of winners too soon, you guys do not let your winners run. Try those two things. The tier trading strategy, okay? Derp. I'm gonna boot you, bro. I'm gonna boot you out of here, derp. That's right. The Yankees and Astros are going to be two very good teams for a very long time. Both clubs, real young, and fun to watch. I think we're going to have a lot of ALCSs in the future, bro. But anyway, Rhonda, like I was saying, the tier trading strategy, okay? The tier trading strategy, and then also try removing your P&L from view. Michael, do I still talk to some people from the hedge fund? I'm still in communication with 4 people, but very, very rarely. Sometimes we try to get together for the holidays. Like we'll try to get together in New York City for a drink or something like that. But I mean, it's been so long. I don't really, stay in consistent communication with them. I mean, there is one trader that sometimes we communicate, back and forth, kind of bounce ideas off of one each other. Sam, I try. I try. I don't really go that, I try. Oh yeah, Adele, you got to stick to your stop loss. That's one of the other most important things that I would tell you is to always, 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 always stick to your stop loss. Sung Joe True, the best way to trade while you're working. Two things. One, you can focus more on swing trading and setting your stop loss, and you can set trailing stops on winners. The other thing is at True Trading Group, we have text message alerts. So we actually there's a lot of members in TTG that are not in chat during the day because they have other responsibilities. They don't have, they have other responsibilities where they just can't be in chat all day long, like I can and like some of us can. So, we send out text message alerts every time I enter and exit a trade so that you could follow along with what it is that I'm trading on your phone. So that is something that we do offer at TTG, and a lot of members trade off of that. Yes, Chaiweezy, I do not trade with a hard stop if I'm at my desk. If I walk away from my desk, I have a hard stop in place. But I don't set a hard stop when I'm at my desk because, I set a stop loss area, and when the stock gets to that area, I want to see how the stock reacts, and if that area actually is support and we get a nice bounce back. I just don't want my position to be triggered by like 1 penny of a print, and I trust myself to manage my risk properly. If you do not trust yourself to stick to your stop loss, and the stock gets to your stop loss and you don't get out, and it goes lower and you still don't get out, and it goes lower and you still don't go out, that's how you can really get into some serious trouble. So that's why I always recommend for new traders, always set a physical hard stop. And if you don't trust yourself, set a physical hard stop, because that's how you can really get yourself into some serious trouble. Yes, REIT, you will get a tax document from your broker. Yeah, the Giants, I don't use hard stops either. I use mental stops. Yes, TNE co mentor. Is there any other trick besides lowering size to increase trigger confidence? Literally everything is down except for that part. Plan, risk, reward, often saying this is a good one, but just don't take it. Self-confidence is an important part of being a profitable trader because you cannot second guess yourself. And honestly, one of the things, and I'm not sure your experience level, but one of the things that will help increase your confidence is education. It's just like taking a college exam. If you know the material on this exam in and out, you know it like the back of your hand, the night before the exam, you're going to be chilling. In college, you're playing video games, you're having a beer, you're watching the football game. Meanwhile, your roommate is in complete panic mode, trying to cram until 5 a.m. and then trying to cram an hour before the exam because they don't know the material. They're nervous going into the test. The more you know the material and the more you educate yourself, the more confident you're going to be in pulling the trigger. So that's something that really, like the curriculum that I created on the TTG website, that is something that I really kind of gear it towards is explaining the information in a manner in which you can understand easily so that you're confident in the material. All right. This is the same stuff I learned at the hedge fund. I've just simplified it so that you can understand it very, very straightforward and implement it into your trading and feel confident that you know the material. Yes, Sung John Chu. Whenever I enter a trade, a text message gets sent out. You get it right to your cell phone that lets you know I just entered ABCD at this price and this is my stop loss. And then when I sell the position, that's when you get another text message that says, I'm taking profit, this stock, this price, or I'm stopping out of this position at this price. Regina, yes, there's a membership right now. Regina asks, do you charge for people to follow you while you trade? Yeah, we have a trading community, True Trading Group, where we are the highest rated trading community actually on Trustpilot. And right now you can take advantage and get 25% off of the entire 1-year all-inclusive package that includes the entire TTG curriculum and access to chat and to follow along with all the trade alerts. Well, one life, one chance. With the TTG BF19 discount code, if you use that discount code tonight, you get a free 30-minute one-on-one. So one life, one chance. Use the discount code TTGBF19. If you do that before midnight tonight, you get a free 30-minute one-on-one. McCall, if you didn't get any text today, send an email to info@truetradinggroup.com. Yep, thanks, Alex. Rhonda, yes, there is a certain way to play stocks that are being halted on the way up, but it is a very detailed, complex lesson that we unfortunately do not have time for today. But that is something that we do discuss in chat. There have been a lot of stocks that have been halting lately in the small cap land. And it really has a lot to do with using halt prices similar to how you would use initial morning highs. I do have some videos on the YouTube channel, Rhonda, that do talk about this. Okay. There are some things that do talk about this on the YouTube channel. So I do have some videos that do discuss it. If you go back just a few videos ago, Rhonda, there's a trade on ASLN that I made where that goes over and discusses trading off of a halt. No, Sungju Chu, we have a lot of members. Okay, SJ, we have a lot of members that trade from their phone because that's the beauty of it. Because I'm not a scalper, so I'm not in and out of a stock within 20 seconds. I might buy a stock and then I'm selling it 2-3 hours later. So it's very easy for you to follow along on your cell phone. I mean, freedom traders, it depends. You got to define rich. I mean, small caps eventually will cool off. Small caps are not going to be hot all year round. So if you're going to make consistent money, you've got to be able to trade things other than just small caps. But yeah, SJ, getting back to your point, if you have your whatever broker that you sign up for, okay, whatever broker that you sign up for, whether it's Robinhood or E-Trade, you have the app on your phone. You download the app on your phone, and then if you're a member at TTG, whenever I enter a trade, you're going to get a text message that says that I just bought stock XYZ at $10 and my stop loss is $9.50. Then, maybe an hour later, you get another text message that says, I just took profit on XYZ at $11. I'm still holding some, and so on and so on. So you'll get text messages so you can follow along with what it is that I'm trading. So SJ, I would, like I said, we have a lot of members that trade, from their phone. So I would definitely take advantage of the Black Friday sale because that gets you the trade alerts for a full year. Nice, Rhonda. Take advantage of the Black Friday sale. Guys, this is one of the best offers that we've ever had because it's 25% off. It's a 1-year membership. It's the beginner courses, the advanced courses, the option courses, and all future courses. And a 30-minute one-on-one. It's literally everything that we have to offer. literally everything we have to offer. So Rhonda, right there. Use that discount code. Rhonda, also, if you guys have any questions about signing up or you need help signing up, send an email to info@truetradinggroup.com if you have any questions or need help with anything. You can also send a text message if that's easier for you. You can send a text message to 201-775-9702. Excellent. Great stuff, guys. Man, another successful – I love these Q&As with you guys. I really do. I love these Q&As. JCS2 TV. You got to take profits on the way up, man. A way to help you with this, you should never let a winning trade turn into a losing trade. But specifically to help you with this, JC, is to tier out of your position on the way up. Don't hold your entire position until your final profit target is met and then sell your entire position. Identify multiple profit targets. Set like your final profit target and then an interim profit target. So that if the stock gets to this level, you're going to take some profit off the table, lock it in, reduce your risk on the rest of the position. But more importantly, you're taking profit off the table so that if the trade does end up turning around, especially on an option trade, because an option can go from up 100% to down 20% like that, especially if you're trading same day expiration, you got to take profits on the way up. Okay, you've got to take profits on the way up. As the trade works in your favor, start peeling your position off the table. Like I said, I use 25% when a stock starts to work in my favor. Then as the stock extends, I take 50% of my position off the table, and then I hold on to 25% in case we get real big follow through and real big continuation, and then I'll sell that last final piece as my final take profit is met. Well, because on the mofo, on the way up, you're well into your 2-to-1, 3-to-1 risk reward. So when you enter your trade, okay, so typically, and this isn't a prerequisite, but mofo, this is kind of what I kind of end up doing with a lot of my trades. My first 25% that comes off the table is at like a 1-to-1. Okay, is like a 1-to-1 risk reward, but the bulk of my position comes off at the 2-to-1, 3-to-1, 4-to-1. So when you're wrong, you're stopping out on your full position, but when you're right, you're getting a lot more than that even risk. So by using the tier trading method, it keeps you in the winning trade longer. So by you selling 25% of your position at like that 1-to-1, you're still holding 75% of your position. It's still the bulk of your position, but now you're protecting your downside. You've reduced your risk. You took some profit off the table, and this makes it a lot easier to hold on to the position because you've got smaller size, so you're risking less, and you already locked in some profit. So now if the stock starts to jig around a little bit, you're not getting shaken out of the trade. It's a lot easier for you to hold on to your position. And that's why I use that tier trading strategy, and that's why it's designed to help you stay in winning trades longer. All right? I figure out my exits on options based on the underlying stock and the targets that I set. So when I'm buying an option contract, I have a target that I think the underlying stock is going to go to. And as my profit targets are reached on the underlying stock's price action, I just peel profits off my options. All right. All right, guys. That's it. that concludes our live Q&A session. I want to thank all of you. All right. No, that's not true. One life, one chance. That's not true. You can use Fibonacci's any time frame. You can use Fibonacci's intraday. You can use it on a daily chart. You can use them on a 15-minute weekly chart. You know, you can use Fibonacci's whenever you want. The idea of a Fibonacci is just to track, you know, statistical levels of support on pullbacks. It's literally just a mathematical equation where if a stock does this, it's plotting statistical areas of support. So as long as you identify a move that you want to see a pullback on, you can use a Fibonacci level on any time frame. All right. Okay, gang, that's it. Awesome Q&A session. Thank you so much for joining me. This was great. Again, guys, tomorrow's TGD Tuesday. Go to TrueTradingGroup.com. Click on TGD Tuesday, register, come and chat, trade with me live for free for the whole day. And if you guys want the free one-on-one session with me, you've got to sign up for the Black Friday sale. TTG BF19 will get you 25% off a 1-year membership, all the trade alerts, the text message alerts, the swing trade alerts, all the TTG trading curriculum, all the courses, beginner and foundation, advanced options, and all the future courses coming down the road. All right. So again, if you guys have any questions, send an email to info@truetradinggroup.com. And I hope to see many of you in chat. I hope to see many of you in chat. Thanks, Giants. Yeah, man, I think 2020 is our year too. We got to sign. We need another starter. We got to sign Cole or somebody like that. We got to sign somebody this year. All right, guys. So thank you for joining me. I hope you guys enjoyed the lessons and the content and the questions. Make sure to like this video, comment, subscribe. Make sure you signed up for notifications so you don't miss any of my videos with free mental and technical lessons. Again, guys, this is just the tip of the iceberg. If you guys want a true professional education, take advantage of this Black Friday sale. It's one of the best offers we've ever had and probably one of the best offers we're going to have for quite some time. So take advantage of, well, you get 25% off right now, Derek. You get 25% off, gives you the full year subscription and all of the courses. All right. Have a great night, everybody. I hope to see many of you in chat. Thanks for joining me with this live stream. I'll see you guys tomorrow. Take care, everybody. Have a great night. I hope you guys, we still got a lot of people are typing comments, so I'll just leave it open for a couple more minutes. Yeah, Derek, it comes out to less than a cup of coffee a day. So every morning I get a Starbucks vanilla cream cold brew. It costs me like $4.50. With this 25% off, it comes out to $3.07 a day. So, you know, if you drink a cup of coffee every day, you go to Starbucks or Dunkin' Donuts, it's the same as a cup of coffee. All right. So that's it, gang. SJ, make sure you sign up, brother. I want to see you taking advantage of all those text message alerts while you're working. All right. Regina, I hope to see you in chat. Rhonda, I hope to see you in chat. SJ, thanks for joining me, guys. That concludes our live Q&A session. Hope you enjoyed it. I'll see you guys all next time. Take care, everybody.